Hey everyone, this is June from Turning Point Life Investment, and I have Chris here with me.
Hi, everybody.
And this is your market analysis for July 28th, 2011. I'm looking at the S&P 500 here. Today, another down day. We have basically 4 days in a row, straight down days. And usually when the market has days or consecutive down days like this, it tends to tell you that the market's kind of getting stretched out to the downside. The last time we had 3 consecutive down days, and we got the next day, which is a pretty decent size or some kind of a relief rally bounce. Same thing here. We had 6 days in a row, got a day's worth of bounce. Back here, 4 days down days in a row, got a couple of days worth of bounce. So this being the fourth currently, there's a good chance we can see some kind of a bounce coming soon, a relief rally bounce. The market stalled right at that magical number of 1300 once again for the S&P 500. So 1300 has been proven to be some pretty strong resistance, or in this case support level right there. Okay, so that's something to pay attention to, because once it breaks, that means we're going to experience some more selling coming ahead. Not to mention that the market also fell back into this rising support line here. So a couple of important support levels that are around that same area right there. Now, one thing I want to mention is divergence is starting to appear, and that's the same type of deal last time I mentioned here, where the market dropped, and we suspected that the market can probably head a little bit lower simply because we haven't seen divergence yet. So you see the market made a couple of new lows, and right here the MACD, you can see that the peaks aren't as low as before, so it's actually starting to rise, and that's divergence right there. And we're starting to see that. Okay, we're starting to see that, how the market made a nice push yesterday, and then we made a new low today. But you can start to notice the peak isn't as low as the previous one. Now, I'm not saying that the market can't go lower. Absolutely, it can. But we're starting to see some weakness coming in towards the downside, and that usually means that the selling pressure is starting to get weaker. Okay, but it still can get lower. Just keep that in mind. Going out here into the VIX. Now the VIX is starting to head into some pretty high territories right now. Last time we were here, we had a pretty decent bottom. Same goes for back here, and of course here, back in mid-March with the whole earthquake and tsunami. But you notice that every time, at least the several times that the VIX has made it back into the low 20s or mid 20s, that marked a decent size or decent bottom for the market. All right, so we're back here again, and that tells you something, that bearish sentiment is pretty high right now. And usually when sentiment's extreme, either bullish or bearish, that tells you that it's near the top or bottom. Okay, so in this case, since bearish sentiment is pretty high, there's a good chance we're near some kind of a bottom, at least a short-term bottom or whatever it is. But the main idea is that we should expect some kind of a bounce soon. And also putting on the Bollinger Bands, the VIX closed outside of the Bollinger Bands twice, and the last time it did that back here, we produced that bottom back in mid-June, which is, let's take a look, back here. Okay, so that was the last bottom when the VIX was back up into the 23, 24 area. So overall, I think a lot of people are just waiting to see what's going to happen. A lot of uncertainties out there. Not until next week on August 2nd till we have a better idea of what this market wants to do. And as a result of the uncertainty, that's what people like to sell, because it's uncertain, right? They like to stay in the cash, and they liquidate their positions as a result of the uncertainty, and that's why we're seeing some selling pressure coming into this market. Anything you want to add here, Chris?
No, you hit everything.
All right. Now, with that said, you still want to be prepared. If we are expecting some kind of a bounce soon, whether it's tomorrow or Monday or whatever the case is, you want to be prepared with some positions and some plays in mind, because you don't want to be chasing the market as it's going higher. Okay, otherwise you're going to start feeling anxious. You're going to start feeling that you don't want to be left out, and this is where you're scrambling to look for stocks to buy. So rather than doing that, why not have some bullish plays just in case that the market does decide to bounce? And even though right now there's not a whole lot, but the ones we have are, for example, LVS, still holding above the gap right here pretty decently. So again, if the market rebounds, then I can see LVS hitting higher, probably up into 50. MCP, another good one, some pretty decent gains today, continuing higher after breaking out from this inverse head and shoulder right here on very good volume. Okay, that's something you want to see, is on good volume. And I mentioned on Tuesday to watch out for a pullback towards the 20-hour moving average, and it managed to hold. It kind of breached it a little bit, but it bounced right back up today. So that means every time, as long as MCP continues higher, if it comes back to this 20-hour and it holds, then that provides a good entry or a re-entry point into this stock. And the last one I want to mention is NCR. NCR made a nice pullback after breaking out on high volume, okay, and it made a nice pullback towards the $20 support level. Today it pulled in a pretty good looking bullish engulf on high volume. So you have a bullish engulf right at support on high volume. That tells me that's a pretty strong support level, or at least there's a good amount of buying that's going on right at that $20 level. Okay, so again, these are some plays for you to keep in mind in case if the market bounces. What do you have for us, Chris?
First stock that I have is EVEP. And I know that we had talked about this on Tuesday, but I really like it still. If you look at the price action for the last week or so, it's just basically been side trending compared to the rest of the markets when the markets have been selling off. So it's actually been holding up pretty well. And if we're expecting some type of a relief rally, or even if the market wants to move up higher, if EVEP can probably get above 65, so it's going to move up higher. The next stock is Lulu, L-U-L-U. And also very similar to the last stock we just took a look at, and this thing is basically pulling back to its 20-day exponential moving average, which is right around the $60 level too. So if it does pull back there, it makes for a little nice buy, but it's basically been consolidating after hitting a new high. So the last two stocks that I talked about, they're still on my strong stocks watch list, and the market wants to move up or something like that, I wouldn't be surprised to see these stocks get more buying pressure into them. Another stock that I want to take a look at is MTN. This is something that I like for market conditions the way they are right now, where we're not sure if it's going to move up or down. This stock is currently consolidating in a triangle right now, and it's been forming that for the last 3 months or so. And me personally, I love triangles to the upside when they get a break above the top of the triangle. That's actually what I'm looking at for this stock. Probably first target is around $47.80, somewhere around there, that prior high. We're right there. And then probably the next target is going to be above 48 after that. Now, if this thing wants to break to the downside, I would just be very conservative on shorting it. But if the market conditions do continue to be bearish, then I would definitely be expecting maybe a move under 43, or target of 43 for the short side. Last stock that I want to take a look at is, it's actually just kind of a fun stock, is XHM. This is something you definitely don't want to put, you never bet the house on any trade. But I do like this because it's forming some type of a double bottom pattern, and the resistance level is at 26. So whichever way you want to look at it, you can say it's a cup and a handle, and 26 is the resistance, or you can say it's a double bottom. Either way, just know that it's been some type of a consolidation. The last couple days, volume has picked up greatly, especially on the gap up yesterday. And I want to, really believe and think, and it looks like if it gets above 26, more buying pressure is going to come into the stock and push it up higher.
Okay, sounds good. Thank you, Chris. Let me go and kind of talk about the moving averages. I think someone mentioned about the moving averages on the forum. Moving averages, quite simply, is just whatever the last, we'll use the 20 moving average, whatever the last 20 candle or bars, you take the average closing, you take the closing price, you basically divide by 20, which gives you the average. So as each day progresses, you're going to get new data, and you just connect the data, and that gives you the line, which is the 20 moving average. Now, the moving average does change with the time frame. Time frame meaning day, weekly, monthly, hourly. Okay, so on a daily time frame, you're looking at the last, on a 20-day moving average, you're looking at the last 20 days average closing price. Now, if we go to a weekly view, then you're looking at the last 20 weeks worth of closing price on average. So you can see that how moving averages does change, and then going into an hourly view. Okay, so it does change the look. So you have to really be careful as to what you're using as support and resistance when it comes to moving average. The idea doesn't change, though. The idea and concept of a moving average does not change in different time frame. Only the look changes. Okay, so just be careful with that. And you don't have to change your settings. The moving average will change automatically when you switch from an hourly to a daily to a weekly. But just know that, like I said, the concept of it is the same. In a downtrend, the 20 can act as resistance. In an uptrend, the 20 can act as support, and this applies to hourly, 5 minutes, daily, weekly, or whatever the case is. Okay, so trading, like I said, is the same. Technical analysis is the same, and this is what I tell the students that we tutor is technical analysis is the same in any time frame. It's just the only difference is your holding time and your trading time. Okay, and that applies to moving averages as well. Anything else you want to go over here, Chris?
That's about it, but I will have more to say on this weekend's market analysis video.
Yep, and that sounds good. So without anything else, I think just be cautious out there, especially over this weekend. I probably won't be holding that many positions, if at all, over the weekend, because we just don't know what's going to happen. I mean, last weekend we had a pretty decent-sized gap down on Monday, so especially with all the uncertainty, the weekend tends to be pretty risky holding positions over that time. But until then, either stay in cash, or if you do trade, go very lightly. Okay? All right, guys. Talk to you later.